Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1448, and today's date is December 5th, 2017, and the title of the episode is, We Are at the Economic Stage Which Prevailed in the Lead-Up to the 2008 Crash. Now, before I get started, I just want to make an announcement. I uploaded an interview with Rick Rule. It is on the X22 Report Spotlight YouTube channel. So all you need to do is go over to YouTube, type in X22 Report Spotlight. It will bring you right to the interview. Or you can come over to the X22Report.com site or NewsSentinel.com. Scroll down a little bit, look over to your right-hand side. You can play the interview right on the site. Or you can go to Steemit. That is steemit.com/@ X22 Report, and you can play the interview right on Steemit. Let's get into the economic collapse financial news. Now, we know from going back in time, the central banking system, their mandate is to control the creation of currency and to spread debt around the globe, which basically impoverish nations, and they're able to go in and steal a lot of their assets. If there is another currency that is out there that is a threat to their system, they try to figure out a way to make it look like that currency or whatever it is not good. You shouldn't go for it. It's not going to be worth anything. The only thing that's going to be worth anything is their currency. We see this happening with precious metals, gold and silver. For many, many years, they've told us that it's worth nothing. It's a barbarous relic. It's meaningless. Well, the same thing is happening with cryptocurrencies. They realized that it's very difficult to control the crypto market. And we can see that it's decentralized. It's not centralized like their currency. And yesterday we talked about how they're creating this futures market. Now, the SEC, they fast-track the approval because what the big banks want is what the big banks get. Now, we see at this point, they're going to use this to try to control Bitcoin. Because as you can see, Bitcoin continually goes up in value, more people are getting involved, and this is a threat to their system. But there's a lot of issues here, but the main thing is that these are cash-settled contracts. This means that for all intents and purposes, these are dollar-based bets on where the price of Bitcoin is going in the future. And dollars, unlike Bitcoin, are in nearly infinite supply. Remember, of course, the Fed, they're able to create currency out of thin air. Now, the question on everyone's mind is how much of an effect this will be. Well, it will simply make high-frequency scam trading and spoofing in Bitcoin an official part of the market through the creation of a near-infinite supply of dollars. And the issuers of that supply will use those price moves to push or pull the Bitcoin market itself to fit the needs of the banks, the central banks, the exchanges, and everything else. They've done this with gold and silver using GLD. And what they've done is they created these gold futures, and they're able to control the price of gold, control the price of silver, and they're trying to do it with Bitcoin. And this is exactly what they're trying to use to control the whole thing. Now, when we look at this, there might be a silver lining to all of this, because Bitcoin is not an asset where the existing power structure can coordinate pricing worldwide. Because you have to remember, Bitcoin on the blockchain system, it is traded 24/7. Compared to gold and silver and other precious metals, well, they're traded, Monday through Friday. They have a certain period of time, and it closes on Friday, and you have 2 days for them to coordinate, to create headlines, to make bad bank settlements, to dump paper contracts, get them ready. Bitcoin, on the other hand, is 24/7, so they won't have time to do all of this kind of stuff. But you can see they're trying to figure out any type of option to control the blockchain system, and they think this is a way to do it. Now, we'll have to see how this goes forward, because we don't know how much control this will be. And who knows, the Bitcoin market might just ignore what they're doing. And we'll have to wait and see how this turns out. We see Toys R Us, well, they are going down in flames right now. We see out in the UK, they're going to be shutting around 25% of their stores. And we see this is about 26 stores of the 90 stores out in the UK. And it looks like there might be more stores on the way that are going to be closing, because after this holiday season, as we can see right now, it is not going well at all. Now, of course, the corporate media is out there trying to make it seem like, well, online sales are incredible, Amazon's doing fine, but they're talking about billions of dollars. They're talking about, oh, look, it went up by $9 billion, it went up by $3 billion. This is a $1 trillion business, the retail industry. And Amazon is only 3% of that. Online sales in total is only 10% of that. So we see at this point, the retail apocalypse, well, it's going to continue after this holiday season. And going into 2018, it's going to get a lot worse. Now, we've been talking about auto sales, and we've been talking about how they've been channel stuffing the lots here in the U.S. And remember, when they channel stuff the lots, that is considered a sale. It's not when you sell the car to the individual, to the family, to a person. It's when they bring the car onto the lot of the dealer, they say, oh, we have a sale. Now, looking at the numbers, we can see that most of the car sales today, well, it's not in the U.S. It's in China. And this is what's been helping them out all along. I mean, of course, they've been channel stuffing, but there's a lot of sales that are going on in China right now. And we see that when we look at the numbers, GM sold about 70% more vehicles in China than in the U.S. Now, think about this for a second. After the 2008 crisis, and this is the first time since 2009, sales in the U.S. have plunged, and as the sales plunged, they picked up in the Chinese market. And they kept on growing in the Chinese market because the Chinese were using this free money. They were purchasing, building, using the dollars, buying gold. They were doing whatever they possibly can to stimulate their economy. And this is how the automobile manufacturer did so well during this whole period, by channel stuffing and selling a lot of vehicles in China. All of this is coming to an end. As we can see, China now is moving their investments to the One Belt, One Road. They're pulling their investments from the U.S., from Canada, from Australia, from all different areas where they were buying a lot of real estate. And they're putting it into their trading system. And we see that the automobile manufacturers, they're going to have a very tough time. The builders are going to have a very tough time. We see right now the Bank of Japan, well, they are tapering very quietly right now. And you need to remember that the Bank of Japan, well, they have been creating currency like crazy. And we see right now that on their balance sheet, they have about 443.6 trillion. And when you compare that to the Fed, I mean, it dwarfs what the Fed has done. But we can see what these central banks do. They move the stimulation from one area, from one central bank, I should say, to another central bank. And it looks like they started to taper back in March of 2016, and they've been tapering all along, which means there's another central bank right now that has been pushing the stimulus, most likely the ECB right now, and it looks like it might be coming back to the Fed. And to come back to the Fed, they're going to have to make a case of why they need to push this, and they need to, create currency out of thin air once again. Now, of course, they're going to use some type of an event. Something will happen. Something will hit the financial markets. It could be a black swan, something the Fed didn't see coming. Or there might be some other distraction where they're saying, oh, because of this cyber attack, because of the cyber attack that hit the financial institutions, we need to help out by creating more currency to prop up the banking system, which is on a bank holiday right now. We see the yield curve right now, it just keeps collapsing. And don't worry, it's probably nothing, but every time we've seen this before, guess what? We were already in a recession, headed into a depression type of period. Now, what's very interesting about all of this is the central bank of central banks, which is the Bank of International Settlements, they've come out with an announcement. They said the situation that we're in right now, the economic situation, bore similarities to that which prevailed in the lead up to the 2008 crash. Increases in interest rates by the U.S. Federal Reserve and the Bank of England had failed to choke off risky investments. Financial bubbles were growing. Financial investors were basking in the light and warmth of improving global economic growth. Subdued inflation, soaring stock markets, while underlying risks were increasing. And they said, this looks the same as 2008. Actually, we're giving the same exact warnings. Now, Claudio Borio, the head of its monetary and economic department, said the vulnerabilities that have built around the world during the long period of unusually low interest rates have not gone away. High debt levels in both domestic and foreign currencies are still there, and so are frothy valuation. What's more, the longer the risk-taking continues, the higher the underlying balance sheet exposure may become. Short-term calm comes at the expense of possible long-run turbulence. And what they're saying is that we're headed down the same exact path. What we saw back in 2008 is happening right now, but it's a lot worse. It's tenfold, because they didn't fix any of the problems. The automobile manufacturers, it's going to be a disaster for them. The housing industry, it's going to be a disaster for them. The student loan market is going to be a disaster. The job market, which is completely fake, is going to rock the entire country. When all of a sudden these corporations that haven't had sales, they really aren't bringing in profits. Yes, they were able to manipulate their books to show earnings are great. All of a sudden, they're going to be laying off left and right. And people are going to be scratching their heads going, what is going on here? This is what happened to the lead up of 2008, where all of a sudden companies out of nowhere needed help. And everyone thought they were doing fine. And of course, the Fed came out and they said they contained it all. Don't worry, Bear Stearns is fine, Lehman's fine, AIG's fine, everything's fine. We just have to keep giving them money. The same thing is going to happen. We've been tracking all of this. The real economy, the people's economy, not the Fed and the government manipulated number economy. I'm talking about the people's economy, where people go out and they find a job, they feel comfortable in the job they have, they go out and they spend money in retail, they buy homes. It's non-existent. The people who are purchasing homes, they're foreign investors. They're in hedge funds, investment companies. And they've been purchasing these homes with cheap money. The everyday American, they're not in the market. They kept the interest rates very low to try to bring people in, but it didn't work. This is why in the automobile industry, they had to go to subprime to subprime to subprime to get more and more people into the market just to sell cars. Remember, when you're purchasing a home, when you're purchasing a car, you're not using any of your own money. You're borrowing from, yes, ultimately, the central banks. And their product is debt. And the only way to get you to do anything is to keep interest rates low and open it up to those people who really shouldn't be in the market to purchase. And this is why they come up with no down payments, because people don't have the money to put a down payment. And this is all going to backfire. It backfired before. It's going to happen once again. And when this black swan or whatever event occurs, people are going to be shocked, stunned that this all happened. They're going to think, how did this happen? Because they've been telling us that everything was fantastic. And we're going to sit back and go, this is why we've been telling you to get prepared, because things were never fantastic. It was a lie. In 2008, they told us the subprime securities were AAA. It was a lie. They told us that, oh, all the companies, everything's contained, don't worry about it. Housing prices never fall. Never heard of this before. It was a lie. Don't worry, all those jobs are out there. Everyone can keep them. Well, People got laid off. It was a lie. All of it was a lie. Even to get the currency from the government to bail out all these corporations, they had to lie about that. They did it to keep their system alive. Then they had to create currency out of thin air and prop up the entire system, and they couldn't stop. They had to lower the interest rates to zero, to negative, to keep it all operational. If they let the market do what the market should do by itself, the whole thing would have been a disaster. It would have crashed already. Now, they let it go throughout this whole time by pretending that everything is fine, and they made the situation 100 times worse. So we're going to get 100 times the collapse that we should have gotten back in 2008. It's just a lot worse now. And a lot of people are going to be shocked and surprised. This is why you need to be ready and prepared. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.